Hello everyone, welcome to our channel The Commerce Catalyst. Today we are going to start diminishing balance method in depreciation. So the question is a machine was purchased on 1st April 2022 for rupees 2,50,000. On 1st October 2022 another machine was purchased for rupees 1,50,000. Estimated scrap value were 10,000 and rupees 5,000 respectively. So estimated scrap value is 10,000 and 5,000. Depreciation is the provided at the rate of 10% per annum on the machine under the written down value method, that is the reducing balance method. Pass the journal entries and prepare machinery account for the year ended 31st March 2023 and 2024. So in these questions, so we have the two things. First one is the journal entries and another one is the ledger account of the machinery accounts. So now first of all I start the journal entry. So this is the format of journal entries. This is the format of the journal entries. In the books of journal entries and prepare the machinery account for the year ended 31st March 23 and 24. In the books of, write down here, in the books of write down journal entries, journal entries as on dated 31st March 2023, 31st March 3 and 24. Write down here is the date, particulars, LF, laser folio, amount, rupees, amount, rupees, debit, credit. The first April 2022, 2,50,000. Machine was purchased. So, what is this entry? The machine was purchased. So, machinery account debit to bank account. So, the journal entry is the machinery account debit to bank account. Machinery account debit to bank account. First April 2022. Machinery account debit to bank account. Machinery account debit to bank account. How much? 2,50,000. 2,50,000. 2,50,000. Machinery account debit to bank account. Now the narration, being the purchased, being machinery purchased. Machinery purchased. Machinery account debit to bank account 2,50,000. The first April. First October 2022, another machine is purchased. Another machine is purchased. That value is how much? 1,50,000. 1,50,000. So the again it is the machinery account debit. Machinery account debit to bank account. How much? 1,50,000. 1,50,000. Narration being machinery purchase. Now that estimate depreciation is to be provided 10% per annum. So depreciation in the first machine is the, so write down the depreciation account debit, depreciation account debit to depreciation account debit to machinery account. Machinery account. How much? Working note. The important thing is the working note. Working notes. How to calculate? So first machine is 2,50,000. So this is used in for whole year. Yani because the close year ending is the 31st March and start the machine, we have start the uses on from 1st April 22. So 1st April 22 to 31st March 23, the whole year depreciation in the first machine is the 2,50,000 into 10%. It means 25,000. 25,000 is the depreciation in the first machine. And another machine purchased on 1st October 2022. So from 1st October 22 to 31st March 23. So this is the October, November, December, January, February, March. So for 6 months use this machine 1,50,000. So 1,50,000 into 10 by 100, it means, and 6 by 12, so 7,500 is the depreciation. So total depreciation equal to 32,500 is the depreciation 31st March 23. Depreciation account debit to machinery account. This is the working note for the first machine and second machine. So depreciation charge here is the 32,500 and here is the 32,500. And the questions asked to us, what question asked the year ended 31st March 23 and 24. This is the 1 year depreciation, and another year how to calculate. So because of diminishing balance method, I already discussed about that. Straight line method is called original cost method or fixed installment method, and diminishing balance method called reducing balance method. So this is the reducing balance method. So name itself said that reducing means if this amount is reduced by the original cost. So that is known as the diminishing balance method. But if the method is charge fixed installment method, then always charged on original amount, like a 2,50,000 and 1,50,000. But in this case, because of the method has been changed and method is the diminishing balance method, so in this question we have charged the depreciation in 2,50,000 like a working note. First, you understand, you have to understand working notes in first machine value is a 2,50,000. Second machine value is a 1,50,000. So in the first year, depreciation charge less 25,000. So this is the 2,25,000 here, and 1,50,000 is only 7,500. Why? Because we have only used 6 months in 22-23. So here is like 1,42,500. Now depreciation will be charged on 2,25,000 and 1,42,500. But in both the machine, the depreciation will be charged for whole year. Why? Because now first 31st March 23, the depreciation account debit to machinery is 32,532. But in this time we have charged 10% at the rate of 10%, 2,25,000. So how much? 22,500. 22,500. And is a 14,250. So total depreciation 22,000 and 36,000 depreciation account debit to machinery account. How much? 36,750. 36,750. So this is a general entries. Now we will make the ledger account. We will make the ledger account. So how to? Just remove this one. This is the ledger account. So first format is the ledger account. So you write the, here is the machinery account. Machinery account. Machinery account. This is a format of machinery account. This is a format of machinery account. This is a format of machinery account. Date, particulars, amount, rupees, date, particulars, amount rupees, date, particulars, JF, amount, date, particulars, JF, amount, debit, credit. So this is a diminishing balance method. We make the machinery account. So again, 1st April, a machine was purchased on 1st April 2022, rupees 2,50,000. On 1st October 22, another machine was purchased 1,50,000. So here is 1st April 2022 to bank account 2,50,000. 2,50,000. So depreciation charge 31st March 2022 23 by depreciation account how much? 2,25,000 because the depreciation charge at the rate of 10%. And another machine was purchased on 1st October 2022, so to bank account 1,50,000 by depreciation 31st March 23 7,500. Why 7,500? Because the calculation like that 1,50,000 into 10 by 100 into 6 by 12. So you calculate it like that, and say 6 2 is 12, 2 5 is 10, and done so 15 5 is 75. So 7,500 is a depreciation. So right here the 7,500. It means 32,000. So total value is a 4 lakh. Right down here is the 4 lakh. 4 lakh minus 32,500 because 4 lakhs minus 32,500. So 3,67,500. So 3,67,500 is the balance CD. So write down here is the buy balance, and here the buy balance CD. So now this is the 1st April 23 to balance BD. BD means brought down, carried down. So brought down how much? 3,67,500. And in this year also the depreciation charge 10%, but because the method has been changed and method charge here is diminishing balance method, so working note like that, because in first machine working notes working notes working notes of in first machine my dear friend, it is a very important to understand the working note. If you have to understand working notes, so this kind of depreciation problems will make easily. So first machine value how much? 2,50,000. 2,50,000. I already told in previous classes in depreciation chapter the two things, yani two key points. Number one is the date and number two is the methods. So how first you have to understand the date when you have the purchase and you have to sell, and second in which method. So in this question the method will be method charge diminishing balance method. So that is also known as reducing balance method. Sometimes in questions given the diminishing balance method or reducing balance method. So whatever in written, you have to understand this is the diminishing balance method. So diminishing balance method means, reducing balance method means you have charge depreciation each year is different, not a original cost, like that. So first machine is the 2,50,000 charge at the rate of 10%. So at the rate of 10%, this is the 25,000 in first year. So value is the 2,25,000. But in second year, and first year it means 1st April 2022 to 31st March 23. You have charged at the rate 10%. The value is the 25,000 in the first machine, and second machine 1,50,000 and depreciation charge 7,500. I already discussed there how to calculate. So 7,500, and now the 1,42,000. So now in this year, that means it means 1/4/23 to 31st March 24. you have charged the depreciation at the rate of 10% in balance amount. In balance amount. So what is the difference between original cost method and diminishing balance method? Original cost method, each year depreciation charge the 2,50,000 and 1,50,000 if in two machine. But in diminishing balance method, we have charge depreciation in diminishing मतलब balance value. So balance value means 2,25,000, 1,42,500. So in 2,25,000 at the rate of 10%. So how much? 22,500. 22,500. 22,500 is depreciation charge in this year. In which year? 23, 24. 23, 20. Because this is the not a calendar year. This is the finance 1/4/23 to 31st March 24. What is the difference between calendar year and this is the when you say 1 for calendar year is the first Jan to December and this is the April to March. So in this time 22,500 is depreciation charge here and here is the 1,42,500. So how to calculate? The very simple 1,42,500 into 10 by 100. So this one, and it means 40,250. 40,250. In this period, in last year, you have charged 7,500 is depreciation, but in this year 14,250. Why? Because reason behind it, you have used only 6 months in last year this machine, because this machine was purchased on 1st October 2022. But in this year we have used the whole year because 1st April 23 to 31st March 2024. So the depreciation is charged is 22,500. So write down here is by 31st March 24 by depreciation account how much? 22,500 plus 14,250. It means 36,750. 36,750. So 36,750 is the depreciation. So now write down here 3,67,500. 3,60,000. 67,500 and minus 36,750. 3,67,500 minus 36,750. The 330,850. 330,850 by balance CD. So this is the value of 2324. So this is the ledger account of machinery account, and hope you have to understand the concept of machinery account and how to calculate depreciation value. So this is the very important for methods, and key point is the date and method. I already discussed in previous classes. Why is required the date and the method? Because if you make mistake for understanding the date and value and method, so that time you make the mistake to calculate the proper depreciation. And if you have make the mistake to proper method, so then your value is incorrect. So this is not good for our books, because accounts is the looking glass of the business. So then we don't say accounts is the looking glass of the business. So hope you have to understand. Thank you very much.